Hi, this is Ashwin with over 14 years of experience in insurance, reinsurance, and catastrophe modeling. In this PPT, we will discuss insurance distribution value chain. We will discuss insured, insurer, agent, broker, and MGA, and why each of them is necessary in the insurance distribution value chain. And towards end of the PPT, we will discuss the variation in each of them along with examples. Let's get the PPT started. Insured is a policyholder who could be an individual, an institution, and an organization looking for insurance. Let's look at what is an insurer. Insurer is the provider of insurance. So, insurers can be classified as domestic, foreign, and alien depending on the laws under which they are formed. In domestic, an insurer is licensed to operate in the state and follows statutory laws and requirements of that state with headquarters too in that state. Whereas in foreign, it is an insurance company that is located in one state but also writes policies in other states. So it does business outside the state of domicile. An alien insurer is an insurance company that is located in one country but writes policies in other countries as well. The above three are categorized as admitted or a non-admitted insurers. So what is admitted? They are carriers licensed and comply by the State Department of Insurance. The policy forms, rates, requirements are verified by the State Department. If an admitted insurer fails, the state insurance fund will help make payments on claims. So for small businesses, it guarantees coverage. Whereas, as a non-admitted insurance carrier, they do business through wholesale brokers in states where they do not have license. This means they don't follow the same state regulations as admitted carriers. If non-admitted insurer fails, the state insurance department makes no payments on claims. These carriers are also called excess and surplus carriers and are regulated by state surplus lines office. Now that we know the insurers and its categories, now let's look at the role of the agent. So, in the insurance industry, an agent represents insurers. Its responsibility is to distribute insurance policies and inform the insureds regarding coverage, explain its policy info, and provide suitable terms on behalf of the insurer. So, there are two types of agents, one is captive and other is independent agent. Captive agent, also known as exclusive agent, sell insurance for one insurance company. They can be independent contractors or employed by the insurer. While independent agent sells policies from multiple insurance carriers. Hence, coverages can be compared and the one that best meets the requirement can be opted. As you can notice from the diagram, insured can approach the insurer directly or can approach the insurer via retail agent. So we have seen agent who represents insurer. Broker is someone who works on behalf of the insured. Broker is an intermediary who has vast market exposure, contacts, and knowledge, and it utilizes for the best output of the insured. From the picture, you can notice that for standard risks, insured can approach insurer directly or use broker service. Aon, Marsh, Willis Towers Watson, and Gallagher are giant brokerage hubs that are available in the market. Retail brokers work with more general and less complex policies, and the reason why we have wholesale brokers. Wholesale brokers sell more specialized insurance products. So, retail brokers who work closely with the insured approach wholesale brokers when insured needs to purchase more complex risks. So, a wholesale broker does not need to touch base with the insured as seen in the image. RAN Specialty Group and Risk Placement Services are leading wholesale brokerage firms. Sometimes clients' needs are greater than what standard market can insure. This is when they may need to access surplus lines or non-admitted insurers. A segment of wholesale brokers is surplus lines broker, specialized to access particular insurers with more risk appetite. Again, as seen in the image, they are intermediary between retail broker and excess and surplus insurance carrier. Amwins is an example of surplus lines. Now that we have discussed insured, insurer, agent, and broker, the next in the distribution chain is an MGA. MGA stands for Managing General Agent. The way it differs from insurance brokers is that the insurer has given power to underwrite and perform various other tasks, such as underwriting, binding, policy administration, claims, and distribution on behalf of the insurance company. Normally, they are done in house by the insurer. MGAs mostly don't deal with the insured directly, but deal with retail brokers and wholesale brokers as seen in the image. This is a comparison slide that shows how each of the partners differ on various aspects as can be seen with the examples. Please go through them and let me know for any questions. This marks the end of the presentation. Thanks for your time and I await your feedback. Wish you a very happy new year 2025.